Alright, welcome back to the Trading Course series, and so this is episode 4, and we'll be going over fair value gaps, volume imbalances, and liquidity voids. So I'm just going to go ahead and keep this pretty short. So I want to go over the 3 of these and what they are, and just simply go over it pretty quick, and then at the end, after I'm done explaining all of them and what they are, I will go ahead and show examples of each. So that way, I'll do examples after the explanations of all of them. That way, if you do not feel that you need the examples, then you can go and close the videos. But if you do, then they're there for you. So, fair value gaps, form of internal liquidity. So like I said, if the market isn't accumulating or consolidating, then it's hunting liquidity, right? So if it's not hunting that external liquidity that I covered, like swing highs and lows, it's going to be hunting for internal liquidity, which is going to be like fair value gaps. Okay, that's a form of internal liquidity. And so this is what they are. So it's a 3-candle sequence. There's bullish fair value gaps and bearish fair value gaps. So the color of the candles do not matter. It's the way that they're formed. Okay, so 3-candle sequence. So this one right here, I'm looking at, this is a bearish one. So it goes from, for a bearish one, it goes from the low of the first candle to the high of the third candle. Here, let me change this color here. Which one? Okay, here we go. So in the yellow is the gap. So this is it. And so the way we would want to see price react to it is we would want to see it. Where's my drawings? Is go down, like do whatever, and then go up, and then go back down. So bearish fair value gap right there. So bullish, same thing, but just opposite way. So 3-candle sequence, high of the first candle, low of the third. Fair value gap right here. We want to see price come down right there. So that's that for fair value gaps. Like I said, the colors do not matter. It's the way that they're formed. Okay. And actually the middle obviously does matter. The middle color does matter. If it's blue, it's going to be bullish, black, bearish. Okay, so we got volume imbalances. Okay, so I had to pause there for a second, but volume imbalances. So volume imbalances is going to be another form of gap and that the market can draw towards. Okay, so here we go. We have a bearish example and a bullish example. Okay, so it's a 2-candle sequence this time. So I want you to see this here. Okay, we have this gap here, right? The close of the first candle, this is 2-candle sequence, right? Close of the first candle to the open of the second. Close of the first candle, opening of the second. And so we can see that we have this big old gap here, right? And this is what they'll look like, okay? And so the gap is going to be, like I said, close of the first candle, open of the second. Close of the first candle, opening of the second. So this is bearish, this is bullish. So if you want to see it, this gap, right, the wicks overlap, okay, wicks overlap, they cover the gap, okay. The gap that would have been there if these wicks weren't here, there'd be a gap, but these wicks are there. So what we would want to see for these examples is price go up and then retrace back down. Price go down, retrace back up, okay, so that's liquidity voids. No, excuse me, volume imbalances. That's volume imbalances. Liquidity voids, on the other hand, it's another 2-candle sequence here. So let me go ahead and take this. So I'll go ahead and draw it out, and then I'll skip the video around. Okay, so I went ahead and skipped ahead, but so liquidity voids. So, and I do apologize for that, these being different colors, but you should still get the gist of it. So liquidity voids is another form of gap. And let me go ahead and put these wicks on here real quick. Good. Gotta move them. Okay, so it's a 2-candle sequence, except the only difference between the volume imbalance is that there's no wicks to overlap it, right? So where did we go? Okay. I mean, there can be wicks, but they still leave a gap, okay? And liquidity voids, like there's literally a gap, okay? So low of the first candle to the high of the second for a bearish example, right? And now let's just imagine that this is the high and this is the low, right? And then for the bullish, it's the high of the first candle to the low of the second. So this is what it is. And so we would want to see, where's my brush at? Price. Let me see. Let me go ahead and extend this. So for the bearish example, price go up, go back down. Bullish, go down, go back up, right? And so if these wicks weren't there, okay, this would be the gap, okay? And if these wicks were like a little bit longer like this, it would not be a liquidity void, it would be a volume imbalance. And we'd be looking at something like this if this was here, okay? And that would be a volume imbalance. Okay, so that's explained. If you need to do it, then go ahead and rewatch all of what I explained. I'm going to go ahead and move on to the examples now. So fair value gaps. Let's go ahead. I'm going to get off this chart. Okay, so fair value gaps. Let's find a bearish example. Let's find one that was actually used. Okay, let me go to the 4 hour. Let's find one for you guys. Here we go. Okay, so bearish, like I said, 3 candle sequence, low of the first, high of the third. This is it right here. Okay, and as we can see, we went down, went back up, reacted off of it, and continued down. Bearish fair value gap right there. Go ahead and find a bullish one. Go down a little bit more. Okay, so this is a pretty good example here. So let me go and remove this. Okay, so 3 candle sequence, high of the first, low of the third. Bullish fair value gap right here. You can see that we tapped into it. We went higher, we tapped into it, and then continued higher. Okay, and so I want to actually go over this here. You can see that this, and this is also another bullish one. Okay, high of first, low of the third, went down, continued up. Okay, so volume imbalances, gonna go get those examples out here. So we have a bearish one. I marked it, go in and marked it out here. 2 candle sequence, like I said, the wicks overlap with the gap, with the opening closing price being different. We can see that when price opened, or when price closed, it closed in here, right? The next day we had went up, went into that volume imbalance, and then continued down. Okay, and then we have that's a bearish one. Okay, we have a bullish one, wicks overlapping with the closing price and opening price having a difference, but the wicks overlapping, bullish one right here. And we can see that while we did not react right off of it, we pushed through it and then reacted. Okay, and then we came back down and pushed through it and then reacted off of it again. Okay, that's an example of a bullish one. And now I will say this, you won't usually be seeing a lot of liquidity voids and volume imbalances in the charts, and especially in the strategies, but you will, in the strategy that I use, but on a higher time frame, you will be seeing these things, especially on the DXY chart, if you're going to go ahead and be using that. So next we have liquidity voids. So I'll go and show a bearish one. Okay, let me go ahead and find one. So we actually have one here, a liquidity void. Okay, so like I said, 2 candle sequence, low of the first one for bearish, low of the first one, high of the third one, or second one, high of the second one. Okay, and so we have that marked out right there. Here we go, right there, it's marked out. And as you can see, this was in November, right? Literally in April, we finally met up with the liquidity void, tapped into it, went down, reached, we didn't tap back into it, but we reached near it and then continued further downwards. Okay, so that's bearish liquidity void. I'm going to see if I can find a bullish one. Well, we have one right here. Okay, so high of the first, low of the second. This is it right here. As you can see, we did draw to it, and we did push through it. We didn't react right off of it. We pushed through it, but we eventually came back up. Okay, we did target that liquidity void. And so that's all I have for these three things: fair value gaps, liquidity voids, and volume imbalances. And I'm not even sure what we're going over in the next video, but you'll see it when it comes out. And I do have it outlined in episode 1. So with that said, happy trading.